Good evening, this is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Wednesday, the 21st of May. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some what I'm doing and learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right. Okay, interesting day. I was saying in the morning today that we might start seeing these double tops on ES and NQ, and actually on IWM, though not on RTY, start to play out, and that is indeed what we saw today. Now, this was triggered. It was looking not that promising until we had the failed treasury, the bad treasury auction today, and that sent interest rates up and that sent equities down. I don't think this move is finished. I think it's probably got some more, but I'll show you what I've got. In terms of the 60-minute sell signals, which I really liked, which we had this morning, they've all made on SPX and Qs and on diet. Those have all made the possible near miss targets, but I think there's definitely scope for this to go lower, and I think this might well go lower, although I think we're probably going to see a bit of a rally first, and I'll explain why I'm thinking that. But I am wondering if we might actually form a head and shoulders here. This is a double top breaking down, but if we see a right shoulder here and then a fail, we could actually see a larger pattern that could take us down into the 5700 area. So I'm going to be watching that with interest. So at the moment, we've got a double top, which is looking for about the 5810 area. Looking at NQ, NQ double top started to break down here, but obviously we've not seen any conviction break of the weekly pivot, which is the key support here. Again, there's possible scope for this to become a head and shoulders with a bit of a rally here. I'll show you again why I'm thinking we might well see a bit of a rally here. RTY gone down, no current positive divergence. We don't have a double top here, but we do have one on IWM. And on YM, this looks exactly the same as it does on Dia. This is a possible head and shoulders, where if we saw a right shoulder bounce, then we could well see a head and shoulders form. And I'm wondering if that's really what we're looking at here across the board. Now, I've got a couple of things to say against that. What I would say is the timing's not great. We're looking at obviously a holiday on Monday. The tape's basically neutral, but it tends to be pretty light trading on Friday. I've got Memorial Day on Monday, of course, and historically Tuesday and Wednesday tend to lean bullish. So I've got to say the timing's not great. And it may be that it's not going to happen for that reason. But I have to say, I'll come to bonds, but the issue we're looking at on bonds here is a very real one. I've talked about it quite a bit. And, I'm wondering about it. Next week tends to lean bullish, so this wouldn't be a great time to see a retracement, but we will see. The following week would be better. But watching this with interest, and I do think this is potentially got some more in the tank, although not for sure. Okay, looking at DAX, we had a 60-minute sell signal fix that hasn't made target yet, and ESTX, we had a 60-minute sell signal fix, and that's now reached the possible near miss target. Nothing really in terms of topping patterns obvious on either of those. All right, let's have a look at the bigger picture charts. Right, looking at let's look at SPX first. SPX, I was thinking that a retracement here might then lead to a retest, which would set up a possible daily RSI 5 sell signal. We didn't see that because it's gone below the 50 level and quite clearly below the 50 level. So that means I'd exclude it from my system for divergence. We've had a decent little retrace here. I've got the 200 DMA at 55.74, and really that's kind of an ideal retrace target, possibly the daily middle band below it, but I'm not sure it's got the juice to get as far as the daily middle band. But I do think the 200 DMA might be in play. We'll see. Looking at the hourly chart, RSI 14 sell signal has basically reached target. I've got that down as reached the possible near miss target, but it's pretty close to the full target. On the 15-minute, we've got an RSI 14 buy signal fixed at the close and an RSI 5 buy signal fixed at the close. This could well be delivering a rally here, and that could be a head and shoulders right shoulder, although this wouldn't be the nicest one. On the Qs, here we could retest the high and set up a daily sell signal, but it would be less meaningful without the one on SPX that won't be happening now. Haven't made a great deal of retracement here so far. In terms of, we've got a potential little level top here, but there's no really decent pattern, and the one that would be a halfway decent pattern is very small and is pretty close to the target. On the 50, in terms of the RSI 14 sell signal here, quite reach the possible near miss target, but I've called it as reaching it. That could be enough. On the 15-minute chart, we've got an RSI 5 buy signal fixed, but we didn't get one on the RSI 14. Could we form a right shoulder here? Not a particularly good one, so we'll see. Okay, on Dia, we have an RSI 5. We had an RSI 5 sell signal brewing, and that's now fixed. I'm quite liking this, especially as we've got one on IWM, although the IWM one has already reached or come very close to the possible near miss target, so maybe we're only really looking at one of these. We'll see what happens tomorrow, but if we see a right shoulder rally, that would look pretty good here. And on Dia, we've got RSI 14 on 15-minute. We've got an RSI 14 buy signal fixed and an RSI 5 buy signal fixed, just like SPX. And we're also at a potential head and shoulder neckline. I'm wondering about a right shoulder bounce and then down. We will see. All right, great. Let's have a look at IWM and the others. IWM, on the daily chart, we had a weak RSI 5 sell signal brewing, and that has fixed, and that's pretty close, very close, the possible near miss target area. I haven't written that up there, but I'm effectively taking that as a hit. Could we have failed at declining resistance here? I was playing around a little bit, and I don't think so. So I was looking at that cushion there. There is a bit of play here, maybe, but I'll have a look at the 60-minute as well. But I was wondering about it. Let's have a look on the 60. Is that a reversal there, which could be interesting? I would say, of course, IWM is generally accepted as actually, okay, that's a failure at declining resistance. That could be interesting. And that could obviously, as soon as we get up through that resistance, then it stops being an unbroken level. But at the moment, that's a 3-touch resistance trend line, and that could be significant. We had a 60-minute sell signal fixed here too. That's now made the full target. And we had the steepest decline on here, but again, you see 15-minute RSI 14 buy signal fixed, 15 RSI 5 buy signal fixed. We've got a little level top here, which could would have a target down here in about the 200.5 area, which we haven't made yet. I'm leaning towards seeing a bit more downside here, but I'm thinking we probably see a bounce here first. We will see. At the moment, looking at the futures overnight, we're not seeing much of a bounce. Looking at DAX, not sure we had enough action to fix this weak RSI 5 sell signal here today. Actually, inclined to call that a full sell signal now, but I'll probably mark that up for the weekend. In terms of the Nikkei, where at the moment we're failing at the 200 EMA. So if that converts back to resistance, we will see. I've got a lot more to say about what happened today on bonds, but we'll get to that. All right, let's have a look at US dollar. Right, DX, this is broken down with a target in 98.4 area. We've kind of got mixed signals here, though, because one, this looks as though it might be a bull flag. It doesn't necessarily have to be a head and shoulders, although it's not a bad head and shoulders. And we've also got short term. We've got a 60-minute buy signal fixed today. So watching to see what develops from that. It could just go through that and go down. In terms of what we're looking at on the other currencies, bear with me. Sorry, I've been moving charts around on here today. And IHS has broken up with a target in the 1.152 area, but again, we've got a 60-minute sell signal fixed. Could this be a flag here? Maybe. Not a great quality one, but potentially. So I'm wondering about that. But mainly because I was a bit surprised the dollar didn't drop more today. Although, as I've been saying, I've been reading a lot that potentially that's a bear flag channel. We'll see how that goes today. But there is a potential point of failure on this move up here. We will see. GBP USD has already made the target here, so there's nothing really outstanding on that at the moment. USD JPY, we've got, this doesn't look like a flag really. Although, there's always a chance, of course, it could be. It's, but I think this looks like a head and shoulders that is broken down with a target in the 141 area. Now, we have got a 60-minute buy signal fix here. It fixed a while ago, and it's not delivered anything so far. It wouldn't surprise me to see it fail, and this is a pretty nice looking pattern. We'll see. So nothing really much of interest on the other currencies here. Let's have a look at bonds. Now bonds, I've run up two for you today. Now we've got the usual ZB chart. Now ZB, of course, is the 30-year bond, and I'm usually looking at TNX for the 10-year yields. But I've actually been looking more at both the 30-year yields and the 10-year bonds. So and they are interesting charts. So I'm probably going to start running both of those in parallel now. And ZN, which is the 10-year bond, bond future, has pretty good volumes, so it's worth tracking. So here we've got kind of a channel here. Looks as though it's breaking down slightly, but this breakdown below these lows was on the bad treasury auction today. Now these have been getting worse because there's less foreign participation, and mainly that's because well, they're pissed off with the US government, and also because there's been talk, I mean, not policy or anything, but talk about, strong arming partners to convert their treasuries into, 100-year zero coupon bonds, which effectively would be just taking their money. And I think people are responding to the talk about that from Scott Bessent, and there was if you want to look it up, it's called the Mar-a-Lago Accord, which isn't actually a formal accord, but it is some proposals about doing exactly that and sorting out the deficit by basically taking the money of people holding treasuries, which are basically US allies. So, and it's got some interesting talk about the tariffs and how that would feed in, and this was from November last year. So this is foreign participation has been dropping, and this has not been improving the quality of treasury auctions. We had a bad one today. It's not the first. And actually, when bonds dropped hard over tariffs, and apparently, that was the reason that tariffs were delayed, because obviously we couldn't let interest rates go any lower. This is interest rates going lower. And I'll show you what that looks like on the bigger picture charts. But let's have a look at ZN first. And this is the 10-year bond. Now here, I've got some nice patterns here, actually. No current divergence. But I've got to say, I've got a pretty nice looking channel here. And the next obvious target in this channel would be down here in about the 108, 23 area or 25 area. So 23, I think. So I'm wondering if it's going to go down there. But let's have a look at those on the bigger picture charts. So, all right, let's have a look at bonds first. Now, bonds, here we had inverse head and shoulders broke up. The minimum target was obviously at a retest of 45.92. We broke that today, and we've almost made it to the full target, which is at 46.5. We made it up to 46.04 today. No current negative divergence on the hourly chart, and on the bigger picture, I'm leaning towards seeing a retest of 48.09, and then the main retest, which is the retest of this 2023 high at 49.97. Now, I'm going to move over to TYX here, because TYX, very interestingly, has actually, this is that 23 high on TNX, which is the 30-year yield. Sorry, TYX, which is the 30-year yield. And here, that retest is actually almost there now. TNX is lagging. 30-year yields are almost back at this high. Now, this is actually over 5%, and given that some of the significant proportion of the treasuries are actually 30-year bonds, this is, and some of those will be rolled over with 30-year bonds. This, of course, has a fairly immediate impact with the amount of debt that's being rolled over this summer. So this is, we managed to get up to 51 today. The retest of the high is 51.52. We're almost there. I'm not seeing any signs of it reversing. This is going to make that target soon, I think. And I think it might go considerably higher, because I'm looking at, on the bigger picture, a possible IHS here. And this is the IHS almost complete. And if this breaks up, it's got a target in about the 9.5 area. We've got a similar target on a similar looking pattern on TNX, but obviously we are less close to the neckline. What I'm thinking is that if we have less interest in treasuries, and if some of our former foreign friends start selling off their treasuries, as some of them are threatening to do over tariffs, then actually interest rates could go up a lot. Now, I don't know if they're going to go up as high as these IHS targets would be, which would be about 9.5 area for both TNX and TYX. But they could go up a lot. And I have to say that countries with as much debt per head of GDP as the US typically have interest rates over 6%. I wouldn't be at all surprised to see that start to be the case here. Trump's not been making any friends. He's certainly not making any attempt to restrain the budget, apart from announcing a month ago that soon he was going to get rid of the budget deficit entirely. It appears that everything he's doing is likely to put it up. Now, obviously, there is some money coming in on tariffs, but it's not likely to be anything like the amount that is going to pay for the tax cuts that he's planning to put through. And also, the tax cuts are a problem because the idea, of course, of the tax cuts is that it puts, increases demand in the economy, gives people their money back, and that will increase spending. But actually, that's not the case. In effect, what the tax cuts and spending tax cuts and spending cuts are doing is they're redistributing money from the lower income and middle income part of the country to the higher income part of the country. Now, one of the things I was taught in economics at school, because it's very basic, was actually one way you can increase demand in an economy is to redistribute money from richer taxpayers to poorer taxpayers or non-taxpayers, because the poorer taxpayers tend to spend everything, and the higher income ones tend to save quite a lot of it. This tax bill effectively is doing the reverse. It's not going to stimulate the U.S. economy. It's going to pull money out of it. So it's really, really basic economics 101. That's not going to work. I don't think this is going to be a particularly attractive tax cut to go to the people with. And honestly, in any other country, this would be an interesting method of committing political suicide. In America, maybe it can fly. But it's not likely to fly particularly well, and it's not likely to go anywhere particularly good. So we will see. But I am thinking that we may well see a bonds crisis this year, and we may well see, and the less attention the government is perceived as giving to any idea that at some stage some of this debt might be paid back, the higher interest rates are likely to be. And I would say that if interest rates did go up to even 8%, then in terms of the rolling over debt, we could well find over the next 2 years to 3 years that the interest rate burden on the US taxpayer would rise by over $1 trillion. That's a lot of money. And that is the price of losing the confidence of the bond market, which I think the government is doing everything it can to try and do. This will be interesting. This is far from the end of the story. I've talked about it before. I will talk about it again. But, interesting development today. What will happen to equities in a bond crisis? Nothing good, I suspect. We shall see. All right, so that's where we are on bonds. Let's have a look at the US dollar. US dollar has broken up. It's actually failing at this resistance trend line. It's quite a significant resistance trend line, and I'm wondering if this fail is going to head straight back to the lows and potentially lower. That would be interesting, and I would say that I've been talking about when we saw this fail up here. I was talking about getting down potentially to this idealized flag support, and we went down to it and we held it and went up from there. Now, a retest would be fine. That just sets up a double bottom, and also may well set a possible RSI 5 and weak RSI 14 buy signal brewing. A hard break, well, maybe. The reality is it's a falling wedge. We do get underthrows. But if we saw a hard enough break and it broke below this rising support here at 96, well, in that case, there are instances where, of course, flags can break the other way and become the topping pattern, in which case we'd be looking at a target, I think, low 80s. It would be a long way down. So sooner or later, I think that's got a pretty good chance. No, I think that might be the 70s, actually. That's all right. I'll work it out and come back to you. But a long way down. So if we see that, then, well, obviously that's the other problem for people holding treasuries here. The administration says it wants the dollar lower. If it's going to go a lot lower, then of course any foreigner holding US treasuries is going to take a haircut. Let's say dollar falls 20%, and that is the sort of decline we might be looking at here. In fact, actually, you'd need to fall almost 30% to get back to the 2008 low. If we saw that kind of decline, then basically, let's say a 25% decline, anyone foreign holding US treasuries takes a 25% haircut on that straight off the top. If the yields are dropping on their bonds, then of course they're taking a further haircut on it. These aren't pretty pictures, and they aren't great numbers, and this could well be a bigger problem in the end of the year, particularly if the US government doesn't pay any attention to it, which currently it doesn't appear to be doing. So we will see. All right, let's have a look at CL. CL, this is an interesting one. I have been talking about this as a potential fail. Because we've got this IHS, we haven't made the target yet. I was saying that this could be a bear flag, and we could see a move up to, let's say, up here in the 66 area, and we would see what happened there. But look at this. This is the high we made here. That is a higher high. This is potentially a flag already, not a triangle, because you've got a higher high there. If this is a flag, then that could be resistance, and we could break down directly from it. Now, what have I got to support that? Well, let's have a look at heating oil, where we already have a very nice looking flag. And let's have a look at gasoline, where we already have a very nice looking flag. And I've been talking about these on the pre-market videos, and I think on Sunday's video, as possible reasons to think that we might see oil fail early. What have we seen form since? A double top. If this double top breaks hard below 60, then the target would be in the 55.8 to the 56.5 area. That could get us basically back to the flag support, and a break below that takes us back into these lows and potentially significantly lower. I've been saying for a while that obviously when the economy is contracting, and I think the economy is contracting, and furthermore, as far as I can tell, subject to anyone's political sensibilities, but I mean, just from a pure economic point of view, I think almost everything that's been done this year is likely to affect the economy negatively. Now, the thing about economic numbers is they take a while to come out. At the moment, the administration is basically showing numbers which really haven't got a lot to anything that happened after the administration took office, and they're using those as evidence that their policies are working, that inflation's going down, but we haven't really seen the real effects of this yet. In terms of price increases, which Scott Bessent finally admitted the other day would be coming and would be able to be paid by US consumers, or the companies selling to those US consumers. So, in terms of those, we haven't really seen those price increases yet. We've seen a few, but not. It's going to take 3 or 4 months to really work through the system. The economic numbers are going to take another 3 months, 1 quarter, 2 quarters. We're not really seeing the effects of those yet. And this is one reason why I've been thinking that we might see more market strength before we see more market weakness, because sooner or later this is going to be negative for the market, but the question is when. But in terms of oil, we've got a nice looking double top here. This could fail right here, and this potentially be the fail that I've been talking about. That we make a flag which is based on this trend line here, and that is a flag. We've got higher lows, we've got higher highs, and we've potentially got a fail. And we will see how it goes. But I think it's not much. It's not much of a, hang on 1 second. Let's see. Is that a higher high? Bear with me a moment. Pretty sure it is it? Yep, it is. That is a flag. And if that failed now, then it wouldn't be a triangle because it made a higher high. That was my main reservation about oil failing here, because it hadn't made the higher high yet, but of course now it has. We've got a double top there, and actually it's looking as though that double top might play out. So that is an alternate flag resistance trend line. And if it plays out this way, that would be a perfectly legitimate bear flag. I think it might be, and I think we might see that fail here. And I think oil, we've been seeing, increases in production from the Saudis. Saudis are quite happy to have a price shakeout and go lower. I think we might be doing that sooner rather than later. So, and if we break down from this bear flag, we should retest this low and very possibly go lower. So we will see how that goes. All right, looking at, obviously we've had a look at heating oil and gasoline on NG. NG, this was interesting. This did look as though we might be looking at a big rally. We made the head and shoulder target at 3.1. We didn't make the extended target down at 3. Then we had an IHS form and break up, but that IHS failed today. So we've no longer, I've taken out the up arrows, and really this would generally lean lower. At the same time, a 60-minute sell signal is fixed, and that's leaning lower. I'm thinking this goes lower, and it may well be heading down to a retest of this low here at 3. That could be the second low of a double bottom, but equally we could just break down directly from there. Bigger picture, well, let's have a look at the bigger picture. Okay. Looking at WTIC, we've got this trend line here, and I'm wondering if that might hold, but if we see a breakdown below 55, then it's gone. So I'm watching to see if we get that, because it's quite a good looking, this is quite a nice looking channel. And until it breaks down, I won't be assuming it does break down. Looking at natural gas, we had a sell signal, it made target, and we've rallied from there, but we're failing at the daily middle band at the moment, and that's not a great area to be failing. On the bigger picture, we had this double bottom break up, and we're testing the monthly middle band as well. And if we see a hard break back below it, then where does price tend to go when you've had a clear bottoming pattern, and this one's very clear, and it's broken up and it's failed? Well, it tends to go straight back to the lows, and I think that one might be what we're looking at here. And of course, something like 40% of the I think the domestic energy in the US is produced by natural gas, and obviously if we're seeing a slowing economy in the US, that's going to affect natural gas demand. We will see. I think natural gas demand prices may well be heading considerably lower as well. All right, I've forgotten to cover currencies, so I'm just going to quick look at those. Covered DX, but not these yet. UUSD, we're testing the daily middle band, and that is significant resistance. I'd like to see it break through it. Maybe it will, maybe it won't. Nothing really on the bigger picture, apart from to say that this may be a bear flag, and this could head back to the lows, which wouldn't be a bad fit with, of course, the bull flag that we've got on DX. We'll see how that goes, but this would be effectively the matching flag for that. Now, obviously, this could break up, but my first lean with a bear flag like this is always that it'll break down, the bull flag that it will break up, and that's because that's what happens 70% of the time. All right, GBP USD went back. Has that retested the high? It looks as though it hasn't, but on the main currency, it's looking as though it has. Okay, there it is. Right, sorry, we'd lost a bar or two. We have got a weak RSI 14 sell signal fixed, and that hasn't made target yet. This one did make target in effect. Bigger picture, though, got to say, this is a bullish-looking chart. Falling wedge, broken up, nice bottoming set up. Again, this is more of a fit with the dollar going down, but if we could set up a smaller double bottom by heading back and retesting this low. But I think this low was in special circumstances. This was Liz Truss, who was a particularly incompetent UK Prime Minister, took power briefly, totally tanked everything, and was basically out of power within 3 weeks. So that doesn't happen in the States. But anyway, we've got, I don't think this will be retested, so I think this double bottom will currently hold, but there's no reason we can't retrace first if the dollar is going to go up. In terms of USD/JPY, we've got a possible head and shoulders here, which is a bit of a monster. And bigger picture, this is looking like it wants to go down. I've got a lovely looking rising megaphone here, and the next obvious target with megaphone support in the 115 area. Again, this correlates with the dollar, so this is a match with the dollar going down. We do see quite a lot of matches here with the dollar going down. USD CAD, bigger picture. Nice, very nice looking double top here. This is a peach. Again, that would match the dollar going down. Looking at Australian dollar. Australian dollar haven't broken up from this falling channel yet, but if we do, then this would look significantly bullish. On NZ, this has been a long consolidation. Could this be a double bottom? Yes, it could. I don't really have anything pointing down here, but we'll see. I could draw in something, but at the very least, I've got nothing breaking up and nothing firm in either direction. So we shall see. All right, great. Let's have a look at the metals. Okay, GC. GC, we've got a 6-minute sell signal fix. We've got an IHS, which is broken up with the target in the 34.85 area. Obviously, that's a pretty good match with declining resistance. So I've been leaning towards it making that and then heading higher. But we've been seeing some really weird stuff on precious metals lately. Gold has barely gone up in the last few days, but the ones which have tended to lag behind, silver, we've got a nice wedge here, but that's almost back up retesting this high, having formed a very nice looking falling wedge bull flag, and that's got a target obviously on the breakup of at a retest of the 34 area, which we're pretty close to reaching. Palladium, wow. What happened? This just tore up to the upside. Now, it's got a possible 60-minute sell signal brewing here, and we might see some retracement, but that was an impressive move. Platinum, absolutely the same. Again, possible 60-minute sell signal brewing. Copper did hardly anything. I was leaning towards this heading higher, and we've just been consolidating ever since this wedge broke up. I'm thinking if it doesn't break up soon, it's probably going to head lower, and we've just established an alternative resistance trend line here. We'll see. All right, let's have a look at that on the big picture. Okay, gold. Gold, we're back over the daily middle band. I'd like to see a retest of the high here. I would say, though, that when we do see a break over the daily middle band, that the next day is, if it's going to reject, it would generally be the next day. Not always, but generally. So I'll be watching out for that. But I'm really liking this being a bull flag. I quite like to see this head back up into the highs. That may not happen unless we see serious equities disruption, which we could see. But I'm not seeing any big patterns here so far. So I haven't really got much to call a big move down on equities, so that's why I've not called one. All right, silver. We've got a beautiful overall bull flag here. That hasn't broken up. There's this smaller bull flag here, which has broken up. But I think this is heading back into this main flag resistance in the 34.5 area. Unfortunately, when that breaks up, that only gets us back to 34.86. But on the bigger picture, I have a nice looking trend line up here in the 38 area, which I really like, and I would love to see it go there, and I think it might well. So we'll see how that goes. Looking at palladium, this doesn't really move the needle. It's a nice move we've seen today. It doesn't really move the needle on the bigger picture chart, but smaller picture, this was quite an impressive move. I'm still wondering whether we retest this low here at 808, but we are increasingly a long way away from seeing that. Could this be an overall bear flag forming? Yeah, I'm afraid it could. We'll see. It's a better bear flag than it is a double bottom. So we'll see. All right, platinum. We've been in this long consolidation for 3 years now, and it's been pretty narrow and it's been compressing. Could this be breaking out to the upside? Maybe. This is a break over the declining resistance at the high here. Either we're about to see a strong reversal back down, or it might be starting a break up out of this long consolidation. And this is a very long consolidation. Sorry, no, it's just over 2 years. But this has been going on for a while. So waiting to see. Because of this long period of compression, we haven't got any buy or sell signals, but this could be, if this follows through, this could take us back and break us out of this range. So watching that with great interest. Looking at copper. Copper, when we got up to 5.35, I was saying that might well be the second high of a double top, and I'm still thinking it might well be the second high of a double top. If we see a sustained breakdown below the 3.9 area, then we would have targets which could take us down considerably into the 2.5 to 2.65 area, and I'm liking that. It's I think that looks really good. So does copper tend to do very badly when the economies are shrinking? It certainly does. So the main targets I would be looking for here is energies, copper, and lumber, which tends to be very sensitive to economic activity as well. In terms of the daily chart, no current divergence. We've just been consolidating here, but unless we break up soon, chances are we're going down. We'll see how that goes. And the next big target, of course, will be the 200 DMA at 440. Okay, bigger picture chart. GDX looks as though it's started to break up. GDXJ looks as though it's starting to break up too. I'm thinking these look like bull flags, and that they're bull flags that may well be starting to break up now. I'm liking the upside here. We are seeing some negative divergence in the short term. Bigger picture, I'm liking the upside. And really, I'm pretty positive on gold for most of, or if not all, of this year. I think it's going to be, I think US Treasury is going to become a much less attractive destination for people to park their money in, and I think gold's going to be a big beneficiary of that. I think crypto could be as well, but we haven't seen any real sign of that on crypto yet. We have definitely been seeing those signs on gold. So gold would be a better bet. Okay, let's have a look at the commodities. So, a moment. Okay. Let's have a look at KC. KC, we had an IHS break up, and it looks like it might be failing, or it may just be that we're forming a bear flag instead. But at the moment, this is not showing any sign of getting back over the monthly pivot. It hasn't even been tested. No current divergence. More to say about this on the daily chart, as I have on all of these. SB, this could be forming an IHS right shoulder. Now, I'm going to show you this on the daily chart, because actually, it's pretty impressive. I think this IHS could have legs. We will see. I mean, obviously, we've got a big head and shoulders breaking down. But again, this is something I was observing on oil when we had an IHS broke up and we had a head and shoulders fall in the opposite direction. And I said that quite often when you see a pattern like this fail, then you will see head and shoulders form in the opposite direction. And I think we might exactly have that here. I'll review that on the bigger picture charts on sugar, but I think that looks very interesting. Okay, we've got a double top possible head and shoulders forming here on CC. I'm quite liking the downside here. We've got a 60-minute sell signal fix, and obviously we pretty much made the targets on the upside. So this would be a good time to see some retracement, and this would be a fairly modest retracement that would get us back basically into a retest this low here in about the 96.50 area. Looking at cotton. Sorry, I was moving this. I was having a bit of trouble with my cotton chart earlier. I won't bore you with the technical details. But we've got here a double bottom which is breaking up. And if we can see a break over conversion of monthly pivot and weekly pivot, I've got a target in about the 67 area. 60-minute buy signals reach the possible near miss target. I'm quite liking the upside here. This is showing some decent resilience to the upside so far, but it's still got to break and convert these. So we shall see. All right, let's have a look at lumber. Lumber, bigger picture, I've still got a target to the downside. I think this is just a counter trend rally. No current divergence, been extremely boring recently, apart from this modest rise. Wheat, I'm wondering about a possible bear flag here, but it doesn't look as good as it did this morning. We've got a weak 60-minute sell signal fixed, but actually this has turned into a full 60-minute sell signal fixed today. But this morning there was also a pattern on corn, and we lost that. Sorry, a signal on corn, and we lost that. Again, we had a possible bear flag here, but that looks a lot worse now. And we also had a 60-minute sell signal, and that failed. So that's not looking as encouraging to the downside. So I'm wondering if we're just heading up towards one of these possible IHS necklines or higher. On soy, we've got possible overall topping pattern forming here, but short term, we've got a little level bottom here, which is broken up with a target in the 107.3 area. I'm liking it. It's nice. And I'm wondering whether this is setting up basically for a retest of this high here at about the 108.3 area. That could set up a little level top. Equally, it doesn't necessarily have to, but of course we've got a wedge here. It's broken down. We're either forming basically an alternate support trend line here, in which case the next obvious target would be this trend line here, now up at about the 108.7.5 area, or we're forming a topping pattern for a larger retracement. We'll see. Okay. Soybean oil, 6-minute buy signal reached the possible near miss target, and obviously at this point I cancel it and just call it as having reached that target. Nothing really saying possible head and shoulders forming here, but nothing really defensive. Live cattle, still wondering about a bit more downside here and possibly a messy head and shoulders forming. Lean hogs, which had been holding the rising wedge support, Nice rising wedge here, by the way. 3 touches both sides, pretty solid. So this is now broken down, and I'm leaning towards seeing a bit of retracement here too. So we shall see. All right, great. Let's have a look at those on the bigger picture charts. And okay, coffee. Coffee, I'm wondering about an overall bull flag forming here, or possibly just a fail. By historical standards, and I can show you the monthly chart, which would show this even more starkly, we are in fairly rarefied territory. And really, I'm leaning towards seeing small downside. On the daily chart here, we've got, this could be a bull flag, and we do have a possible RSI 5 buy signal brewing. I'm watching this with interest, but this could give us a decent rally on coffee. Don't know if it's going to get us back to these highs, which, as I said, were really, really pretty rarefied territory. But it could give us a lower high here, and then maybe continuation down. We shall see. All right, looking at sugar. Sugar, we've got this huge head and shoulders trying to break down here, but in the short term, we've got a pretty nice looking inverted head and shoulders to go up. Now, this is just the same one I showed you on the 60-minute chart, but it's nice. It's really not bad. I'm wondering whether it's got a shot. And if we see a sustained break up over about 18.3, then that would have a target at about the 19.65 area. I think that's got a decent shot, and it's a nice looking pattern, and it would be a good thing to respond to the head and shoulder, bigger picture head and shoulders, which is breaking down, and could, of course, just fail up. Or we could see a decent rally, and then it could go down and play out. We'll see. Okay, cocoa, by historical standards, even more rarefied territory. What are we looking at here? Well, we've been seeing a nice little move up here, holding the monthly middle band. We've got an overall RSI 14 sell signal fixed, but these the last one took 7 years to make target, so it's nothing particularly exciting in the short term. We had a buy signal here that obviously made target in spades. I am wondering about a possible high retest here and setting up a double top pattern, which would be slightly more anchored in reality, because the current one is basically so large, it's just ridiculous. This one would just be improbably large rather than ridiculously large. We'll see how that goes, but I am thinking this move here might be setting up a retest of this high. We'll see. Okay, wheat. Wheat, this looks like bottoming action. Now, I've been told, I have suggested that this might be making a low, and I have been told that that seems unlikely at the moment because there's too much here. I would say that people tend to be pretty bearish at lows and pretty bullish at highs. So maybe and maybe not. As it is, this kind of looks like a bottoming setup, and this looks like specifically a nested bottoming setup. So I'm watching with interest to see how this goes. At the moment, this is trying to break back over the daily middle band, and I'm frankly cheering it on. I would love to see this start to break up. I think we could see a move which could double wheat prices here. That may just be out of any economic reality. We will see. But the technical pattern is pretty nice. No current divergence here on the daily chart. We had a bear flag that broke down. We didn't quite make target here. We got pretty close. This is a viable potential double bottom and part of a potential larger double bottom, and isn't at the very at least an interesting setup. Corn, again, we got wheat and we got corn having these falling wedges which have broken up. We've got a possible IHS forming here on corn. Again, this potentially is very bullish. If we saw a sustained break up over 505, this could take us back up into about the 630 area up here. Not bad going. 50% retracement of this move down. Those happen regularly. So again, it's a nice bottoming setup here, and I'm thinking it might have a shot. I'm also informed that corn, is being oversupplied, but we'll see. It's a nice technical setup in any case. But I have to say, I'll have a chart of it somewhere. But I remember the first time I was charting cotton, when I charted it first time ever on the daily chart, I said to he who shall remain nameless that actually it was one of the nicest topping setups I'd ever seen. I was confidently informed that no, that wasn't going to happen. It was going to go higher, etc. You know what? It came down and it didn't get to that price again for 2 years. So it really was, and the whole pattern delivered perfectly. But sometimes people have opinions about things, particularly when they're bullish at highs and when they're bearish at lows, that are very much in contrast with reality. This isn't a bad technical setup to go up, just saying. Okay, in terms of the daily chart, no current divergence. Broke back over the daily middle band today. Looking at soybeans. Now, soybeans, this really does look like a bear flag. Now, and frankly, the overall setup on soy seemed so poor with the tariff setup that I was a bit doubtful about this getting back to resistance, but it did get back to resistance. Not quite to resistance, but almost to resistance. I'm still thinking until this breaks up from this, so the obvious read on this is a bear flag that would set up a retest this low here at 936. This doesn't look like a bottoming pattern to me. We've also got a falling wedge here, which hasn't broken up yet. Now, if that breaks up, then this changes, but again, we could still see a retest the low to set up a bottoming pattern because we don't have one here at the moment. All right, looking at the daily chart on soybeans, no current divergence. We'll see how it goes. All right, cotton. I'm just showing the weekly chart here because the daily chart doesn't give much detail. Again, we've got a huge falling wedge here, and it's come down a long way, but we haven't yet broken up from it. But regardless of that, we have got a potential bottoming pattern, and I'm thinking this might have legs. We'll see how that goes from here, but if this went up, I wouldn't be at all surprised on this setup. This has made a very large retracement, and I've got to say, to get back to even the 50% retracement would require it almost doubling from here, on not a bad looking setup. We will see. In terms of the, and we've got a weak RSI 14 buy signal fixed on the weekly as well, I would just mention. Okay, lumber, this looks like a bear flag. And in terms of where I'm expecting lumber prices to go over the next few months, I'm kind of leaning towards them going down. So that fits with what I'm expecting to see. We shall see. All right, great. In that case, I think it's a wrap. That's it for today. Should be interesting tomorrow. But what I would say is that Friday tends to be low volume and unexciting. We've got, so any bearish action would probably need to be done tomorrow. And then, of course, we've got holiday on Monday, and the next 3 days lean bullish, I think. It is a bullish leaning week after Memorial Day. So we'll see how that goes. I'm looking for more downside potentially tomorrow. We will see. Ideally, see a rally in the morning, see more downside in the afternoon, get it all wrapped up by Friday. We'll see how that goes. And I will catch you guys again on Sunday night. All right, cheers. Bye.